Hey guys, welcome back to another video by Fully Informed Trade, or Fitrade for short, knowledge for everyone. My name is Alex Cho, and today I'm just going to go ahead and analyze the markets and talk about the short-term action. Overnight, the European indexes have had substantial improvement. The European central banks, along with a lot of other banks, have basically bolstered market confidence by implying that they're going to go ahead and stick in, or just kind of capitalize the bank balance sheets by making sure that they have enough credit inflow. Again, that's just a motion to increase some confidence in the markets, and China overnight decided to lower their bank reserve rates, allowing banks to lend more money out at a time based on the amount of deposits they have inside their banks. So overall, everything that happened overnight was very inflationary, and whenever you have inflationary events, the dollar index typically likes to pull back, and as you guys can go ahead and see, we pulled back all the way down to that 78.20 area. We're bouncing right off that 20-day or 50-day moving average right now. So again, it's just typical market behavior, and because of the fact, that's not the 50-day, it's the 20-day moving average. Sorry about that, guys. We hit that 20-day moving average, we bounced right off of it, and that implies that we should also pull back from the 200-day moving average on the Dow Jones Industrial Average as well. I decided to reinstitute a short position on the Dow Jones Industrial Average by going long the volatility index to buy into some undervalued just to buy into it a little undervalued. I don't have a chart of the volatility index up right now, but I decided to short this market again just because you would have a really hard time breaking above that 200-day moving average, just because we've already broken the 50-day moving average and the 20-day moving average. It's extremely unlikely that we could be able to break the 200-day moving average, already having a 350-point move to the upside. So again, reinstituted my short positions. I did have to close a couple. I did have to close the FAS for a small loss. I mean, it kind of went back a little, and I kind of ate back some of my profits with a small loss on my portfolio, but overall my portfolio didn't take too much damage. I think I'm sitting at around a 3% loss today, but again, I look to earn it back just by shorting this market again off that 200-day moving average resistance area. Okay, and the US dollar index. Remember, the US dollar index and the Dow Jones Industrial Average always move inverse to each other. So if you can see a bounce of the dollar index off that 20-day moving average, you can also anticipate a pullback on the Dow Jones Industrial Average at that 200-day moving average. Now let's go ahead and consider the Euro-US dollar. The Euro-US dollar is having a nice little bounce, and it has pulled back straight from that 50-day moving average. I think it's a 50-day. I'm not sure. These line colors, they're awful. They look so similar to each other. But basically, we're pulling back from that 200-day moving average. We had a short-term pierce, and then we're receding back inside the market. Go ahead and analyze the Direxion Daily Financial Bull, the FAS ticker symbol. Again, we had a nice little bounce, but then we're pulling back a little bit again. Typical market behavior again. This went up 10% on me, kind of took me by surprise. I had to cover my positions towards the front end of the session. And I'm probably just going to have to leave it that way. I don't want to touch the FAS too much right now. Netflix continues lower. This is a stock that I've downgraded severely, and I've told you guys plenty of times to sell the stock because their content, they can't secure content in a timely manner. And no matter how much money you pay for your service, if you can't get content immediately on the fly the day that it's released for DVDs, I see no point in why you would want to have a Netflix subscription. Again, Netflix was trading at a ridiculously high market valuation at around $300 per share. It's gone close to around $64, which is a fair, reasonable value for buying a stock. But again, with all this downwards momentum and so many institutions selling out of that company, I see no reason for you guys to be buying Netflix right now. Alright? Amazon. My sell rating still holds for Amazon. It had a nice little bounce, and I anticipate much more downside on Amazon overall. So again, that does it for me for today. And I still held my shorts on Amazon, so I still anticipate much more. I anticipate this market to go much lower. We're still below that 200-day moving average, and remember the statistics, guys. Whenever a market trades right below a 200-day moving average, it tends to stay there for a couple months or years ahead. So very unlikely that I'll see this stock trade above that 200-day moving average, and therefore I'm going to hold this short position until it breaks above it, which, again, if it ever does break above it, which really wouldn't matter because I instituted my short trade right when I touched it on the first dip. So again, I'm pretty safe here. I don't think they'll touch the 200-day moving average anytime soon, and I think a lot of institutions will continue to sell their block of stock in Amazon. So that does it for me for today, guys. Take care. Hope you guys have a great trading session. Mine wasn't as great as it could have been, but again, looking to make back some of the losses I had over the night session based on the gap open on the markets. So again, see you guys later.